Hello and very warm welcome to today's live trading hour where we'll go through everything that you need to be able to pick out and identify those high probability trading opportunities across some of the world's largest markets, from foreign exchange to commodities and also global indices as well. So without further ado, if we can start with our risk warning, please take a brief moment to familiarize yourself with our risk warning currently up on screen. And for more information, if you are genuinely interested in learning how to trade these financial markets, learn a consistent approach with a high degree of discipline and knowledge and understanding about not just which markets you get into and the trading side of things and the execution side of things, but also understanding why you're doing what you're doing. It is an important part of trading these markets to be able to develop a trading plan, have an understanding for what you're expecting to see happen over the coming hours or days or weeks, and position yourself accordingly. Okay, so for more information, just go to our website there in the bottom left-hand corner of the screen. The livetraderoom.com has got a bit more information there for you, and feel free to contact us if you have any further questions. Okay, so the first thing we do before we get involved in active trading is we want to make sure that we understand some of the news events that are likely to impact some of our trading decision making. So today is obviously Thursday, the 20th of May. We've had some employment data out of Australia, and there was an employment change number which was a significant miss, and the unemployment rate improved ever so slightly. So it's fair to say there's probably a mixed bag really in that. Just looking through some of the rest of the day's trading, it's a relatively light trading week, as you can imagine. You see all those very low impact news events. Just to take you back to last night's, where are we? No, that's Tuesday. Sorry, let's go to Wednesday. We had the FOMC meeting minutes, and certainly those members are really taking on board the concerns with regarding inflation. So it was a little bit, potentially quite bearish in tone, and dovish in tone. Oh, excuse me, sorry. As a result of the inflation story, bearish in tone for the indice markets, but hawkish in tone as far as interest rates and tapering is concerned. So trying to digest that is quite difficult, and to be fair, that's exactly what these markets are telling us at the moment. With the lack of volatility that we're seeing in these markets, we are seeing a kind of a lack of direction across these markets at the moment. The thing is, that's absolutely fine. These markets go through these periods. What we can do is position ourselves when we do get these markets breaking out of these sideways moving patterns. Today, or should I say during this session, within the hour now, we will have the Philly Fed Manufacturing Index. So we'll have a bit of a snapshot in manufacturing in the US, and also the unemployment claims number. You can see there the kind of the steady improvement on the number of people claiming unemployment, and we're looking for, I guess, a 14-month low is what's in the pipeline. So we're just looking for a strong deviation in terms of, does that change the picture from a Fed perspective? Unlikely to do so, but we shall wait and see, and we'll get that number probably through our Squawk service as well. Okay, so anyone trading the Canadian dollar? You've got the governor of the Bank of Canada, which is due to speak. He's holding a press conference about the financial system review. So it may be volatile for the Canadian dollar. Tomorrow morning, we've got a lot of manufacturing and services data due out. But really, the main focus of this week's trading conditions really are around the kind of the growth story, which is obviously positive, reopening, increased employment figures, although not in the US, not at the rate at which they were expected, but nonetheless kind of a positive stimulus growth story, and that's offset by the increasing and alarming rate of price increases in these markets. So it does create a bit of a problem, and up on screen now you can see the 10-year Treasury note. It's kind of very slowly edging higher. We did sort of break that 169 level yesterday off the back of I guess we saw further upside moves as we went into the FOMC, and we peaked at that 169. So you know, we kind of bounced from 162 to 169, so that's a significant move in a few hours basically. We've just come off those highs just a little bit, and it now looks like we're getting a little bit of an uptick potentially in these yield prices, and that's broadly speaking not great news for the indice markets. So we're left just deciding where are we at in these markets, and let me bring over our trading screen for you. So the two major markets, so every evening we have our trade plan webinar, so we want to see if we can position ourselves in these markets, and this is what we're currently looking at. So we were looking for a buying opportunity, and largely due to the fact that the gold market is a hedge against inflation. So with inflation concerns and worries, we'd expect further upside in markets like gold. So so there may very well be opportunities to get in on a bit of an impulsive move to the upside. You can see the volatility in these markets is not great. We're not getting huge clarity really in these moves over the last number of hours. A little bit of up and down in the euro dollar. An attempt to squeeze lower in the S&P, which has kind of reversed a little bit. And gold, but now things might change.
Riksbank's Kingsley says the outbreak of the pandemic does show the importance of having room for manoeuvre.
Okay, that's interesting. So So really, it's a volatility. It's a kind of a trading volume issue today, and there's obviously a distinct lack of clarity as well in these markets. So
a spokesman for the UK government says they're keeping a very close eye on the virus data.
I imagine they probably would do. What we can do is we can just take a little view of these markets on the daily time frame, and we can just see the up and down nature in the euro dollar. So very likely to see further upside in the euro dollar. The quality of the trade setup is not fantastic. It is consolidative in nature, and that's when we do get this type of up and down type price action. So let me just get up my pen, and so when we see price action like this, there's a bit of a sort of a narrowing of price action over a prolonged period of time, and we can see that if we understand that we're kind of in this, we're trading inside the previous ranges, the previous day highs and lows. It does, sorry, I can see our camera's just gone for some reason. I think we're back. So we can see this on the smaller time frames as well. So taking a look at the daily time frame can give you a little bit of a snapshot. If we look at that and we zoom out a little bit so we get a little bit of perspective on it, you can kind of see what's happening with this price action. This is an hourly time frame. So broadly speaking, the market is pushing to the upside, and we are getting a lot of sideways moving patterns with some further potential upside in this trade. So really it just boils down to kind of volume and volatility, which is limited. I'm just looking at our camera, it keeps tapping in and out for some reason. So looking at the same chart, really, the daily time frame on the pound dollar, you can see there's a bit of support coming in, but yeah, if you're a buyer, you wouldn't be too impressed with this price action. It's broadly speaking, we are in this sort of sideways moving pattern. So we know that this is a level of support and resistance in here, strong levels, and it's providing this little pullback to previous, what was support now becomes resistance, and it enables these markets to push lower. So if you can imagine, if you are buying this market, you would really want these markets to be breaking above the 140, 140, and that's the psychological shift that we talk about in trading markets, because the psychology is quite straightforward. These markets are battlegrounds between buyers and sellers. So we want to know at what point do the sellers pack it in and look for other opportunities, or maybe look to sell at a higher price. That level is defined as the 140, 140. If you can imagine, if you're looking for prices to continue their move to the downside, you'll be delighted if they break below that 140, 100 level, and you'd be panicking a little bit if prices actually break above the 40, 140 level. So we're firmly inside this little zone, which is really why we don't generally make trading decisions while we're in this consolidation zone, but we can absolutely look to get into this trade if we get that close below that 140, 100 level. So, and we do have some dollar weakness, but it's and we would probably expect a bit more dollar weakness if the equity markets, continued to push higher. That would then begin to make sense. At the moment, that's not really the case. So, in fact, we've spoken about the last few weeks about the fact that we're not really seeing the shift of capital move from your equity markets, which are your risky market conditions, into markets like your safe havens, like the yen and gold and things like that. We're not really seeing the flow of capital as such. Now, very straightforward solution for that is that it appears to be there seems to be this flight to cash almost. So just wanting to just, book in the profit on the trade, put that money, avoid putting it to work, I think seems to be the case. So you'll have an unbelievable quantity of cash sitting on the sidelines, ready to sort of get back involved when these market conditions kind of settle down and when they can identify those opportunities. So looking for that flight to safety trade is a bit precarious at the moment, and that's a very, very interesting development about these markets. So the dollar Swiss, we expect it to continue further to the downside. We're trading inside the previous day's highs and lows. Those are conditions that we're not fans of. But you can see the dollar weakness, and it is across all the majors. It's just we would expect these equity markets to be quite bullish, and right now that's absolutely not the case. So they're actually mildly bearish. The Nasdaq is a little bit more positive to the upside. The Dow Jones is looking quite negative, and then across we have the Europeans, very much indecisive in the FTSE market. The DAX, it's marginal, but it's negative, and so there is this lack of kind of coherent trading opportunity today. So it does make it a bit of a challenge, and you're getting this. And when you get these bear flags, those of you that are familiar with your price action, actually breakout trades of these levels are actually decent opportunities. So in and around the 27,680 would be a decent leg lower, and also back above the monthly high would be a viable trade around the 28,400. So you want this market to just continue to just play itself out, and then when the market moves, you'll have a trade plan ready to execute. The previous price actions coming from above, so we'd probably put a 60% probability on this market pushing lower, and probably something like a 40% on this market eventually pushing higher. So the probability is to the downside, so that we'd be a little bit more comfortable selling below that 27,800 level, but we need to be prepared for the opposite as well, so we can prepare ourselves accordingly. So really it just leaves with, we're getting a little bit of a clawback. This was absolute carnage yesterday. We bounced from a high of let's say 43,000 to a low of 29,000, so that's nearly a $14,000 move, and that's from high to low. That doesn't include the swing to the downside for 14,000. Probably I think we had a $10,000 retracement, and then we kicked $2,000 or $3,000 further to the downside. So when you add up the volatility, you're talking about the best part of $26,000 move in one trading day, and that's just a little snapshot of how volatile it can really be trading Bitcoin. And those that are trading with leverage are getting burned to the downside and to the upside. If you're buying and holding and you're looking to build a position, then it's a slightly different discussion. However, it's important to take that into consideration if you're looking at markets like incredibly volatile speculative markets like Bitcoin and other cryptocurrencies. We get our questions asked all the time about them, and we actually don't trade them ourselves. We certainly through our live trade room accounts, we just don't, because the volatility is too extreme. Now with our own trading accounts, we've taken certain positions, and but looking to sort of hold them for the longer term, and not really interested in getting in and out on a shorter term time frame. Crude oil is having a bit of a tough time. We just bounced off this level and we've reversed with considerable kind of volatility. We've got, you know, quite a decent range between 66 and 58 dollars.
We are expected to hear from ECB President Christine Lagarde either at 10 minutes to or at the top of the hour. A few calendars have to tend to. The ECB website does say at the top of the hour. Lagarde, the Governing Council member Holzman, and the IMF Managing Director all speaking at a conference on gender, money and finance. ECB's website says there'll be no text for Lagarde.
Okay. So you'd have to, if you understand this period of consolidation, and we can probably, just for argument's sake, we can include this bit of price action here as well. So we've been in this kind of range bound market now since mid-February. So we're now sort of mid-May. So we're talking about 3 months of this market pretty much moving sideways, and you'd have to expect further downside from this market. And this is what we really do. We just do analysis. We understand the fundamentals that allow us to just work out where the probabilities lie in terms of to the upside or to the downside, and then we can trade that accordingly. So some mild yen strength. We've just got a couple of issues today with so the yen is clearly one of the stronger markets. We've got the yen relatively strong against the euro and the pound. The yen stronger against the dollar, and the dollar is clearly weaker against the euro. So now we can just sort of compare the euro yen with the pound yen, and you can see that it's kind of marginal. There's not much in it, but the yen has been stronger than the euro, pound, and the dollar today. So it's one of the stronger currencies out there. Looking at the euro pound on a daily time frame, you can see the consolidation on so this is a market that is, there's this upward trajectory. So I can understand a few of our traders are looking to buy this. We are running into strong levels of support and resistance in and around these kind of higher levels. So we're actually looking to see if we can get some proper momentum to the upside, or will we just see that rollover trade and then we see the breakout trade to the upside. So whenever it comes, we can look to get involved to the upside. It's just with this grinding price action, it's not really an opportunity just yet, but that very well may change pretty soon. So a few opportunities as we enter the US Open in about 15 minutes. So what we shall do is we'll leave our trading plan so we'll keep an eye on the euro pound. and we've got the gold and the S&P to just monitor. Okay, so we're keeping an eye on a few of these markets off screen as well. Okay, so leave these levels in there, they're quite strong levels of resistance. So I'll just take note here of the daily high, today's daily high, and see if we get prices breaking above that 41.20. Just a lack of sort of coherent market conditions at the moment. So I can see that we've got the US Open in about 8-9 minutes. If you don't mind, I could do with just sourcing a drink. So I'll be back to you in just a few minutes if that's okay. So I'll put on our welcome screen and I'll put a little note into the chat box. Okay, so let's see what happens on this open in about 8 minutes time, and I'll be back to you in just a couple of seconds. It won't be long. Okay, so not a huge amount to work with, as you can see. There's kind of a lack of volatility, and just looking at the euro dollar, there's potentially an opportunity, but you're kind of just cherry picking. We're not really getting any signals from the indice markets. Gold is doing absolutely nothing. So we'll see. We've got unemployment claims due out in about 15 minutes. So we'll see if that adds any impetus as well. We've got the manufacturing data due out as well, so we'll see. We'll get a little snapshot of manufacturing in the US. So look, we'll wrap it up there. Sorry, it's not the most interesting of trading sessions today, but we have to trade the price action as it comes. So for more information about if you're wanting to learn how to trade the financial markets, just go to our website, thelivetraderoom.com, for more information. And we look forward to seeing you again next week. We don't have this session tomorrow, but from next week we will be hosting these live trading hour at 12:30 every day, so that we can get the US open and get sort of half an hour or so of the price action in the US market. So on that note, thanks so much for joining us. Do take care, and we'll speak to you soon. Bye for now.